Hey guys, welcome back to the channel. Hope you are having a good weekend. Just 2 minutes to check if everything is okay, and we'll begin very soon. Okay, so we can go on. I'm going to check one by one what we have to face and also the potential impact in the market related mainly with the market movers. So we are going to focus only on the most important events, because during the week we have many data, we have soft data, we have data that usually create a small trend in the market, and we have also big important data that may create also a change in trend. So the Monday will begin with Australian dollar, the retail sales. During the previous time it was 0.2% and it is expected to be 0.3%. Month after month, Australia is showing good numbers. However, we have to be careful related with Australian dollars because they had also some other problems on the other data, economic data. So they are showing a small slowdown. However, it is normal because not everything will be up or down. So it is normal also a small pause. During the opening of the European market, of the London market, we have the GDP data from Germany. This is very important. This is also one of the leading indicators related with the European market, with Eurozone, considering that Germany is also one of the strongest economies that is contributing on Eurozone. It is expected a slowdown here. However, let's see what is going to happen. Probably we may see small moves, not any big strength or weakness in euro. So we have to be careful. We have to focus on these indicators, but not to take everything as granted that the price is going to change direction. This is not going to be the focus of the week. We have also the CPI data from Germany again during Monday, so it will be busy with data from Germany. Consumer price index is expected to slow down from 4.5% to 4%. It will be good overall because the Eurozone is expected to decrease the inflation rate like all the other countries. But if this is going to slow down, it is expected that European Central Bank will not increase the interest rates again. However, as we saw during the previous week, they didn't change anything at all, also on their monetary policy statement or on the interest rate decision. So it is normal that it will not impact the market in a significant way. However, the market will move. It will be a clearer situation when we are going to look at Euro USD chart, because the price there already is in the same area since a long time now. So let's see what is going to happen also there. And during Monday, we have also a speech from Governor of Canada, Bank of Canada, Governor McLean. On Tuesday, we have soft data unemployment rate from Japan. Retail trader, these are with orange, but it should be with red here. However, it will be difficult to anticipate any impact in the market related with the yen data, considering that they are not doing anything at all about their economy. So Japanese yen is very weak. I'm not expecting more weakness so far. However, we have to be careful. All the focus is only if the Bank of Japan is going to intervene in the market, but they are not doing anything at all. We have the Bank of Japan interest rate decision later during the early hours of European morning, and also the press conference will be probably during the opening of European morning, as I see, because this is at the opening of the London market here. So the market impact will be big. However, considering that we have the interest rate decision. The market is not expecting anything at all from the Bank of Japan. They will not increase anything at all, considering that they said several times that we are going to change the yield curve, we are going to support the economy, but on the other hand, they are not doing anything. I have many questions related with this topic with the Bank of Japan, considering that they didn't increase interest rates at a time when the other countries already increased. Now all the major economies stopped increasing the interest rates and the Bank of Japan is doing nothing so far. And when they will begin to decrease the interest rates, then it doesn't make sense that the Bank of Japan is going to make further changes. This is a strong reason that I think that probably the Bank of Japan is waiting only for the other economies to act on this point. We have to be very careful because we can see more depreciation on the yen pairs, but it can be very, very slowly. During the opening, we have retail sales from Germany again, small market impact. It should not be a big impact again. And during Tuesday, what is very important will be this part here. It will be during the European, the midday, as I see. We have the GDP data from Eurozone. We have to be careful with these numbers here because this is decreasing from month to month. It is not showing any big strength. However, these are only preliminary data from Eurozone related with the GDP. On the other hand, harmonized index of consumer prices, we have also preliminary data. It is expected to come out at 3.4% from 4.3%. And also during the previous time, it was higher and it was reported a slowdown on this inflation number. So overall, it can be in line with the previous month. So we can see a slowdown here. It will be good for the economy, but probably it can be bad for euro. So it can impact euro, and we can see euro to be weak during this moment. However, it is not a must, considering that if the employment change, the bigger the number will be, the stronger New Zealand dollar can be after the news release. However, we have seen that the numbers have been solid from New Zealand so far. Also, New Zealand dollar is showing a slight strength across all the currency boards, so probably we may see the market to anticipate a stronger New Zealand dollar, considering that already began a movement. And the most important part will be related with the speech that will be close to the European midnight from Reserve Bank of New Zealand governor speech. On Wednesday morning, from Italy and Spain, we have a bank holiday. We have to be careful. It's All Saints Day. However, it is not related with all the markets because the London market should be open. Another important indicator where we have to focus will be the ADP employment change. This is a very strong indicator that is related with the non-farm payroll data, so the market will focus on this indicator during the first moment. And later, we have to see how the market will interpret these numbers. If this is going to show strength, then this is going to impact the market for a stronger US dollar. So the market is going to anticipate higher non-farm payroll data if this is going to come higher than expected. Also, during the opening of the US market, we have to be careful because we have the speech from Swiss National Bank Chairman Jordan. During the previous time, they have speculated a lot with the interest rates, and this is very important and also very risky, considering that they are speculating a lot with their currency by supporting their currency for a long period of time. If we are going to look at the Swiss franc, it is very strong compared with the other currency pairs. And on the other hand, during the previous weeks, during the last 2 weeks, it was not moving at all. So we have to be very careful here with what is happening. So let's see. And the main focus for Wednesday, November 1st, will be Fed interest rate decision. We have the Fed monetary policy statement and FOMC press conference where the Fed Chair Powell will speak. We saw that during the previous meetings, the Fed didn't increase the interest rate, so the maximum that they have so far is 5.5%, and the market is anticipating that probably they will not increase the interest rates. Despite the fact that we saw strong GDP numbers during the previous week, the market was expecting and was interpreting the fact that probably the Fed is going to increase the interest rates. However, it is likely that the Fed will not increase the interest rates anymore. In my opinion, probably this was the peak for the Fed interest rate decision. They will not increase the interest rates further so far as I see. But what we have to be careful is that Powell is still hawkish related with the US dollar. So it is normal that they will not increase interest rates, but they may send again a very strong hawkish signal during the press conference. On Thursday, we have the trade balance for Australian dollar. It should move the market. It's a very important indicator. And another one that is very strong and we have to be very careful is the consumer price index from Swiss. During the previous time, they didn't increase the interest rates because of the consumer price index. So far, it is under control, according to the Swiss National Bank. It is very strange their decision that they are still supporting the Swiss franc to be one of the strongest currencies across the currency board. It is not related with the fact that they are only a safe haven currency, but they are the only economy that are supporting their currency in this crazy way. So they made this clear several times. And all the time that we see a stronger Swiss franc, it is not the market that is pushing at this moment because many currencies are undervalued related with the Swiss franc. But it's the Swiss National Bank that is doing this dirty job so far. So we have to be careful because no one can do anything related with the central bank. So if they want to increase or decrease the value of their currency, they can do it very easily, despite the fact that it is not honest at all for the market to suffer their problems. Also on Thursday, during the opening of the US trading session, we have the Bank of England monetary policy statement, Bank of England interest rate decision. So this is going to be very important for the British pound. During the previous time, the Bank of England didn't increase the interest rates. They want to see how the market will perform in the current conditions. Probably they may not increase so far, considering that 3 months are not enough to see how the economy will perform. They have had ups and downs in the economy. However, what I see as very important is not the fact that they will not increase the interest rates, but it will be related everything with the press conference that will be 30 minutes after the interest rate decision. So everything will be related with the speech and how hawkish they will be during the speech. So everything will be related with Governor Bailey's speech here. So very interesting moment. Thursday will be also a day off, so probably this will be for Friday with the Japanese yen. As I see, the Japanese market will be closed on Friday. And the very strong indicator or the focus of the market for Friday and also the close of the week for November 3rd will be only on the non-farm payroll data. So as we all know, this is one of the biggest events related with the US dollar. The US market is going to release the employment data. We have the non-farm payroll data. During the previous time, it was 336K, and it is expected to slow down to 172K. However, we have to be careful because during the last months, the non-farm payroll data was not in line with the ADP data, but the numbers came higher uh, than expected. So this is what we have to be careful. Probably we may see a bigger impact also this time. We may see the non-farm payroll data to come higher than 172, but considering that the previous month was also the beginning of another quarter, this was very big, and probably these numbers this time probably can be between 172 and 336. So it should be higher than the market expectation, but not higher than the market reported during the previous time. At least this is my opinion, what I'm expecting here. Another focus will be related with the average earnings. That is also a very strong indicator, but lately it is not working out very well, as I have seen. And we have at the same time also the employment data from Canada. Canada is reporting very good data every time in mainly all the indicators, so they are performing very well. We may see a stronger Canadian dollar. However, most of the time we have seen also that USD and Canadian dollar moves in the same direction very often. So let's see how these currencies will support each other this time. So this is what I'm looking for. We have also soft data, but these are not important data. Let's see what may happen from a technical perspective. During the previous week that we had the ECB rate decision and also the GDP data, everything came out as expected and as I explained during the previous time. If you guys will have any question, you can just let me know. You can write on the live chat. Thank you so much for joining. I really appreciate it. So let's see what is actually happening. Just one moment. Okay. So during the previous time that I explained, we had the ACB data and also the GDP data from the US. So they were during the previous week. It was expected from the dollar index for a possible increase during the interest rate decision. But as you can see, this was the maximum that I was expected during that moment, and I'm actually looking at for a larger correction. This is what I'm looking at also for DXY during this moment. If this is not going to be the pattern that we are looking at, another way that I'm looking at for DXY is that probably it created another picture here, another expansion, and we can have a more complex pattern. So probably we may see the price to create a bearish movement in this way. If this is going to happen, we may see weakness in the US dollar, considering that the composition on the dollar index Euro USD is one of the highest one that is evaluated here, that is taken by Euro USD. So this is what I'm looking at for DXY, and probably a maximum movement can happen also up to the top of this wave. If we are going to look at the data that we have, the first one during Tuesday will be the GDP data and the CPI data from Eurozone, and the next market mover will be on Wednesday that we have FOMC. So it is likely that the price will not increase further. So during the data from Eurozone, I'm expecting a possible increase that can happen as a maximum movement for DXY in this area here. This is what I'm looking at. Between 106.9, 107.2 approximately, before the price moves down again. The price had the chance for a bigger bullish movement several times, and that is why I'm not looking at for this movement happening very soon. However, we have to have an open mind this time, considering that also the situation with the current war is not good at all, related with the war between Israel and Palestine, and we can never know how it will impact the US dollar and the market overall. So far, this is what I'm looking at. It is not expected also any big movement from FOMC during Wednesday, and this is the reason why I'm also looking at for a possible bearish move. ACB didn't create big moves in the market. Also, FOMC is not expected to create big bullish moves in the market. This is a strong reason for the price to create these possible moves, and we can see the dollar index moving down close to 105.5 again. However, one step at a time. This is for the dollar index that I'm looking at. For Euro USD, we are going to look at on a weekly chart that I have explained also during the previous times. So the big focus is not changing at all. On the left side of the structure, we may see that the price already stopped close to a strong weekly zone. So this is very dense area, and this is showing that we have buyers located near to 1.0450. Despite the fact that the war is escalating more, Euro USD is still holding strong so far. Probably any big news may push the price down further, considering that it looks like a bear flag. However, so far this is not happening, and that is why we have to be very careful. As I explained during the previous live stream, when we had the ACB data and also the GDP data from the US, they came out in line with expectations. But as we can see, and as I explained, the maximum movement was up to the bottom of the structure and later a possible price increase. But on the other hand, the price didn't react it at all. It was, according to our expectations overall, it was another option. Euro is still holding very strong, and considering that we have FOMC this time and the market will be focused on FOMC and they will not do anything at all, it will be only, I think that Powell is going to use the same old tape. He is going to repeat the same old things again, and it is likely that we may see a possible bullish movement for Euro USD. At least this is what I'm expecting. Probably the big market expectations may create any movement where the price was before, so it can push the price close to 1.05 approximately. However, we should know that this is a very strong area and the price may bounce again. So we are looking at the weekly zones and they are showing the same thing again. This is 1.05, the maximum pullback that I'm expecting for Euro USD. However, the price has to develop more also here. As a maximum that we may wait for Euro USD, I think that should be the top of this pattern, but we should not expect any bigger movement more than this point here, because also this move will be approximately 130 pips. And on the other hand, if this is going to happen, we don't have any strong reason also during these war moments for the price to increase further. So this is the maximum that I'm expecting for Euro USD that can happen during this week. I'm focused on a possible bullish move again, as I explained. Uh, Overall, this picture is very ugly. It's not a very clear picture how it is taking shape, because we are between a possible bigger bearish picture, and on the other hand, we are in a possible bigger corrective pattern that can push the price up. Considering the data, I'm still focused on these moves here. This is the first one that we have. Related with gold, that I have updated also during the previous analysis when the price was down. The first price reaction was very good, and also after the updates we may see that the price is still growing close to the top of the structure. We are in the same situation when the previous war began between Ukraine and Russia. We may see the same bullish moves that were created on a weekly chart, and on a weekly chart we may see also bullish candles again. So I hope the situation will not escalate further. But as you can see from the chart, gold is still dominating the market. The focus of the market is still on gold on this chart. Already reached two of our targets, the 2000 and the most important psychological price level that all the market was looking at. It was already broken, and we have also closed above 2000. The price closed at 2006 approximately. The war situation is already escalating more, so it is not good at all, and it is likely that we may see bullish continuation movement up to the top of this structure. However, for the moment, I think that the price should begin to move through a very strong area, and we have to be very careful from any sell-off during these moments. However, it is still bullish, and it should continue bullish up to 2040, 2060. This is the movement that I'm looking at for gold. So on a daily picture, it is still bullish, and we don't have anything bearish at all. That is why we have to be very careful. And if you are in profits, probably it is better to take profits when the price will reach the targets that we have on the chart. At least this is what I'm actually doing. For US 500, the price broke down during the previous weeks from this structure, created this bullish pullback, but after the war, it's escalating more, and we can see that it is not, we don't have any improvement yet. The price keeps moving down. Also during Thursday, when I updated this chart during the ECB rate decision and the GDP data from the US, the price was close to the structure zone, and as you may see, the price is still below this area. So this is increasing the chances that even if we see a slight improvement here, the bearish movement should continue. The war moment is not supporting at all for indexes to increase further. So far, this is getting clearer that the price is going to move down even more. So all the time, also indexes are a possible sell-on pullback. So all these pullbacks are offering only sell possibilities. If we are going to look at also a deeper pullback, it will be another sell possibility also for indexes. So let's see what is going to happen. I hope that the current conflict between the countries will end soon, because it is not good at all, not only for the market, but for the people that are already suffering from both sides. So let's hope for the best. So this is overall for the coming week, and it will be one of the weeks that will shake the market, I guess, and probably we may see change in trends, because we have very important data during this week. However, uh, I'm going to share also other details during the coming days. So let's see what is going to happen and how the market will develop during these moments. So I hope you guys enjoyed the analysis. Please don't forget to subscribe and hit the like button. Thank you so much for joining today. I really appreciate it. And I hope to see you all on the next live streaming. Bye bye.